Franklin Templeton, Stellar, and tokenization. Three words you've probably been hearing a lot lately, but when you put them together in 2025, the story is bigger than just another crypto headline. This isn't about a meme coin doing a crazy pump. It's not about hype cycles. What we're talking about here is one of the biggest, most respected asset managers in the world, Franklin Templeton, a firm with over $1.6 trillion under management, choosing Stellar as a blockchain partner to bring real-world assets onto digital rails. And trust me, that's not a small move. That's legacy finance planting its flag and saying, this isn't the future anymore. It's happening right now. Franklin Templeton isn't some startup experimenting with blockchain just to make headlines. This is a company with roots going back to 1947, a firm that's been managing money for everyone from retirees to billion-dollar institutions. They've survived wars, recessions, tech bubbles, and financial crises. When a firm like that makes a decision, it's not impulsive. It's not a PR stunt. It's carefully calculated, and it usually signals where the market is going next. So when Franklin Templeton starts issuing tokenized money market funds on Stellar in 2025, that's your sign that we're moving from theory into reality. I know the term real-world asset tokenization gets thrown around a lot, but let's strip away the jargon. Tokenization basically means taking something that already exists, like US treasuries, bonds, real estate, or money market funds, and putting it on a blockchain as a digital token. That token represents ownership of the actual asset. Why does that matter? Because it changes everything about access. Instead of needing $10,000 to buy into a fund, you could buy $50 worth. Instead of waiting 2 business days for settlement, your purchase clears in seconds. Instead of being stuck in one country's financial system, you could buy and trade from anywhere in the world with just your phone. That's the power here. Tokenization isn't about speculation. It's about taking the most boring, everyday financial products and making them open, fast, and available to everyone. And here's the thing. Franklin Templeton didn't just jump into this in 2025. They've been testing these waters for years. Back in 2019, they quietly launched the first tokenized US government money market fund. It wasn't huge, but it proved they weren't afraid to play with blockchain rails. By 2021, they launched the Benji app, letting investors buy shares of that tokenized fund. Again, small scale but real-world usage. Through 2022 to 2023, while the rest of the market was melting down after the FTX collapse, Franklin Templeton kept experimenting, focusing on compliance and infrastructure. Then, in 2024, as regulation around tokenization started to clear up in the US and Europe, they began positioning themselves for something bigger. Fast forward to 2025, and here we are. Franklin Templeton is now officially leaning on Stellar to bring tokenized funds to the mainstream. This is the question a lot of people have. Out of all the blockchains out there, why did Franklin Templeton choose Stellar? Let's break it down. Speed and cost. Ethereum is powerful, but anyone who's tried to use it knows the pain of gas fees. You can't have tokenized funds meant for millions of investors running on a chain where fees jump from $5 to $50 randomly. Stellar fixes that. Transactions cost fractions of a cent and settle in seconds. Compliance-friendly design. Franklin Templeton can't just ape into DeFi. They need a chain that respects regulations. Stellar was built from the start with anchors, compliance layers, and the ability to issue regulated assets. That makes it much easier for an institution of this size to operate without regulators breathing down their neck. Reliability. Solana gets a lot of hype for speed, but it's also had multiple network outages. You can't tell clients with billions at stake, sorry, the network's down today. Stellar has been around for over a decade with near-perfect uptime. For a firm like Franklin Templeton, that reliability isn't negotiable. As of mid-2025, Franklin Templeton's tokenized money market fund on Stellar has already grown past $3 billion in assets under management. That's real money, real investors, and real adoption. And they're not stopping there. Franklin Templeton has gone on record saying they expect 10% of their entire assets under management to be tokenized by 2030. That's more than $160 billion potentially moving onto blockchain rails. To put that in perspective, that's more than the entire market cap of Stellar itself today. Imagine what happens when even a fraction of that moves onto Stellar. So why now? Why is all this accelerating in 2025? It's the perfect storm. Technology caught up. With Stellar's Protocol 23 upgrade and Soroban smart contracts, the network finally has the scalability and flexibility to handle institutions. Regulation caught up. In both the US and Europe, tokenization now has clearer legal frameworks. What used to be a gray area is now something regulators are openly supporting. Demand caught up. After years of wild crypto cycles, investors want stability. They want tokenized treasuries, bonds, and funds, safe assets they can actually trust. Franklin Templeton is simply moving where the demand, the tech, and the law are all pointing. Here's what I don't want lost in the weeds. This isn't just about Wall Street firms moving big money around. This could change everyday finance for regular people. Think about it. A worker in Mexico or Nigeria or the Philippines could open their phone and invest $20 into a US Treasury-backed fund. Something that used to be reserved for wealthy Americans. No brokers, no waiting periods, no crazy fees, just direct access to safe, yield-generating assets. That's the human side of tokenization. That's financial inclusion in action. What happens when trillions of dollars in boring assets like bonds and money market funds move onto public blockchains? Do we keep calling this space just crypto? Or do we finally admit that blockchain is becoming the financial backbone of the modern world? Because when a $1.6 trillion player like Franklin Templeton chooses Stellar as part of their strategy, it's not a maybe. It's not a pilot project. It's the financial industry saying, we're going all in. And that's why this story matters, not just for Stellar, not just for Franklin Templeton, but for the way money itself works in the years ahead. So, let's talk about why Franklin Templeton, of all the giant Wall Street institutions, is choosing Stellar XLM as its backbone for real-world asset tokenization. Because let's be honest, these guys don't just roll dice on a blockchain project. When you're moving billions and soon trillions in assets, you're not picking a chain just because it has good memes or because some influencer shouted it out on Twitter. No, this is careful, this is deliberate, and every move is calculated. Now, here's the thing, Stellar has been around for a long time in crypto years. While some chains come and go, hyped for a year or two and then vanish into the shadows, Stellar has been grinding quietly in the background since 2014. Think about that. Most of the chains we hear about today weren't even dreams back then. Stellar's mission was clear from the start: to become the infrastructure for global money movement, to connect banks, businesses, payment providers, and real people around the world. And that vision, it lines up perfectly with what Franklin Templeton is doing now. Let's start with the obvious. Stellar is fast. Transactions settle in about 5 seconds, and fees are fractions of a penny. Now, that might sound like a small detail, but if you're an institution tokenizing assets and dealing with thousands, sometimes millions, of microtransactions, every fraction of a cent matters. Compare that to Ethereum, where a simple token transfer can sometimes cost $5, $10, or even $20 depending on congestion. For a trillion-dollar asset manager, that's a deal-breaker. And reliability? Stellar hasn't had the same headline-grabbing outages that we've seen on other blockchains. Remember when Solana went down again and again in 2022, 2023, even into 2024? That's not the kind of infrastructure you want to build trillion-dollar markets on. Stellar's been stable, quiet, consistent, and for institutions like Franklin Templeton, that's golden. But here's the big story in 2025. Protocol 23 and the introduction of Soroban smart contracts. For years, one of the knocks against Stellar was that it wasn't flexible enough. It was great for payments, but you couldn't build more complex applications on it like you could with Ethereum. That's changed. Soroban brings a new layer of programmability, but without compromising Stellar's speed and simplicity. And this is where Franklin Templeton sees value. Because tokenizing real-world assets isn't just about putting a fund on-chain, it's about managing it. You need compliance tools. You need the ability to enforce rules on who can own the asset, how transfers happen, and how interest or dividends get distributed. Soroban lets Stellar handle that while still being lightning fast. It's like moving from a single-lane road to a multi-lane expressway. The road was already smooth, but now you can actually handle the traffic of global finance. Now, some of you are probably asking, why Stellar? Why not Ethereum? Why not Solana? Why not Ripple? Great question. Let's break it down. Ethereum, it's the giant. No denying that. Tons of developers, tons of activity. But it's messy. Gas fees are unpredictable. The ecosystem is fragmented with layer 2s, sidechains, bridges. It's like a financial patchwork quilt. Franklin Templeton doesn't want to gamble with a network that can grind to a halt if NFTs suddenly spike again. Solana? Super fast, sure. But outages are a killer. Imagine you're Franklin Templeton, and you've got billions in assets tokenized. Then one morning, the chain goes down. Transactions freeze. Investors panic. That's not acceptable when you're trying to bring Wall Street credibility into blockchain. Ripple, XRP Ledger. Ripple's been in the spotlight for years with banks and cross-border payments. But it lacks the same level of smart contract functionality that Stellar now has with Soroban. Ripple is great for moving money. Stellar can move money and build programmable, tokenized systems on top of that. Big difference. So Franklin Templeton's decision to lean into Stellar isn't random. It's about balancing speed, compliance, and future-proofing. Stellar has always had compliance baked into its DNA. Unlike some chains that took a "we'll deal with regulators later" attitude, Stellar worked from day one to build systems that institutions could use without fear of regulators shutting them down. Stellar's architecture allows for built-in controls like asset issuer permissions, KYC integration, and transfer restrictions. That's not sexy in the eyes of a retail investor, but for Franklin Templeton, it's exactly what they need. They're not interested in experimenting on some Wild West blockchain. They want a network where they can tell regulators, look, this meets compliance standards. And in 2025, with governments worldwide moving fast on digital asset regulation, that's critical. The SEC, the European Union, Asia, every jurisdiction is drawing lines, setting rules, and demanding that blockchain projects fall in line. Stellar is ready for that world. Now, here's where it gets even more interesting. Franklin Templeton isn't moving alone. They're one of the first big names, sure, but think of what happens once they've proven this works on Stellar. Other asset managers are watching: BlackRock, Vanguard, Fidelity, State Street. These guys don't like to be first, but they love to be fast followers once they see something works. Franklin Templeton using Stellar isn't just about one firm tokenizing assets. It's about sparking an institutional domino effect. Imagine a future where multiple trillion-dollar managers are all tokenizing on Stellar. Suddenly, this isn't just a blockchain project. It's the infrastructure of global finance. And we're already seeing the ecosystem around Stellar expand. PayPal's PYUSD stablecoin corridors on Stellar launched earlier this year, giving Stellar even more credibility in the payments world. NGOs and international organizations are using Stellar rails for humanitarian aid distribution. Real use cases, not just speculation. Now add Franklin Templeton's tokenized funds into the mix. Suddenly, you've got a blockchain where regular people can send remittances across borders, humanitarian organizations can get aid to the front lines, and billion-dollar funds can tokenize assets for global investors, all on the same network. That's powerful. What I love about Stellar's story is that it doesn't scream. It doesn't chase the hype cycles like some other chains. Instead, it quietly builds, makes partnerships, and proves its use cases. And that's exactly the kind of energy Franklin Templeton vibes with. Because at the end of the day, we're not talking about speculation here, we're talking about serious money. Money that demands trust, reliability, and scale. Franklin Templeton choosing Stellar is like a billionaire picking a safe, secure, efficient car instead of a flashy sports car. Sure, the sports car looks good, but when you've got valuable cargo to move, you pick the one that gets the job done. So where does this all go? If Stellar continues to deliver with Protocol 23, Soroban, and these growing institutional partnerships, the sky's the limit. We could see entire classes of assets, bonds, ETFs, real estate funds, all tokenized and moving across Stellar's network. For regular investors, this isn't just about Franklin Templeton or some faceless institution. This is about access. It means one day you might be able to invest in a tokenized bond fund, backed by a giant like Franklin Templeton, with just a few clicks and a few dollars, no matter where you are in the world. That's revolutionary. So, here's the bottom line. Franklin Templeton stepping onto Stellar isn't just another news headline. It's a signal. It tells us that tokenization isn't a buzzword anymore. It's the next chapter of global finance. When a trillion-dollar asset manager puts real funds on-chain, it validates everything Stellar has been quietly building for a decade. Speed, reliability, compliance, and the ability to scale without breaking. We're not looking at crypto as a side bet anymore. We're watching it become the infrastructure layer for the world's biggest money flows. And the beauty of it? This shift doesn't just benefit institutions. It opens doors for regular people everywhere to access investment products that were once reserved for the elite. That's democratization of finance in real time. Now, I want to hear from you. Do you believe Franklin Templeton's move will trigger a wave of other giants onto Stellar? Or is this just the early test before the real boom? Drop your thoughts in the comments. The future of finance is unfolding, and it's happening right here.